Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar, and this is our 598th video, baby. Yeah, coming in close on 600. Traders, this video is being filmed on Monday night for Trading Tuesday, June 22nd, 2010. Traders, remember this, futures trading is risky and can cause substantial financial loss. Futures trading is not suitable for every trading account. So if you cannot afford to lose money or risk money, don't play this game. But for you traders that are out there that are looking to play this game, rock and roll, baby, because we got a red Omni on the board for Tuesday. Red Omni is in S&P and Euro currency. Traders, technically, the Euro is looking heavy here once again and should take the S&P down with it. The dollar is beginning to show signs of life. The dollar's looking strong, like it wants to go higher. The euro's looking like it's run out of steam and wants to go lower. And we all know that the ES or the S&P has been in lockstep with the euro lately. So if euro's going down, S&P is likely going with it. One of the leaders of the S&P is NASDAQ, and NASDAQ signals are pointing down at the moment. Its indicators are pointing lower. It's failing at the OTAPMA, or the Omni Trading Academy's proprietary moving average. The NASDAQ daily bar looks like it wants to go lower. Remember that these videos are geared for the very next day's trading, so this video on Monday night is geared for trading on Tuesday. So keep an eye on that and don't use the videos to trade a week later because they are short-term trading for day trading the next day. Traders, I would like to do this. I'd like to thank each and every one of my Omniacs, and thank you so much for your patience. Traders, I know in the last 8 or 10 days I've kind of been a little bit not on camera as much, but here's what's going on. We are moving the Omni Trading Academy to a new location, a much grander location, more space for us, and more opportunity for us to bring you new and exciting features. We've just revamped the entire site, which will open up the doors shortly to bring you a trading school and many other new things. And now we're moving into a new office, which gives me more room to do more things for you in these videos and to a bigger trading facility with more screens in front of me and more analysis. It's all good, but the idea behind this is to thank you for your patience. And I want to tell you, we're out of here in about 5 to 7 more days. We will be out of this location in the new one, and I'll be back in my seat doing my show every day, holding my classes. So again, thank you so much for your patience. Please be patient a few more days, and you got me 100% of the time. All right, traders, now that that's out of the way, let's talk about markets. Again, dollar index starting to look strong to me, and its indicators are pointing straight up. Euro's indicators are now at the top and starting to point straight down, as is with the NASDAQ and the other leaders of the U.S. indices. And again, that OTAPMA, or the Omni Trading Academy's proprietary moving average, has just been keeping the NASDAQ in check. Every time it tries to run up, it gets smacked back down. Look at Sunday night's opening, traders. The ES opened and ran 10, 12, 15 bucks like that on the opening. It could not hold it. It could not find its legs. And by the end of trading Monday, we were making new lows, trading at 11.04 and even lower. We rallied up to 11.27.5 on Sunday night and broke the whole rest of the day. So what that is telling us is that the ES does not have legs. It cannot sustain its rallies, and we are probably going to now start to drift back down. I have some charts to illustrate that to you, traders. So with no further ado, let's go look at some charts. Okay, traders, the first chart we are looking at this evening is the Euro currency September daily bar chart. Each one of these green lines represents 1 day's trading. A couple of questions here. A strong resistance line seems to have failed so far. Has it failed? Is it failing? I think it is, yes. Traders, this is analysis 101 right here. This is simple. You have a trend that's been going down. You connect the high to the next high it connects to. You project it out and let it connect wherever it connects next. That's how you draw a resistance line. 3 valid points gives you a valid resistance line. Point 1, point 2, point 3. Well, what happened when the euro got up there? That brings us to our next question. Is this parallel channel morphing into a bear flag? Well, let's look at that. If you wanted to consider this down move here, the flagpole, and this, the flag, it runs into our resistance right here and fails because this is what the euro did yesterday. on Monday and settled right here. Fell outside of the channel, could not get through the major resistance, and broke lower and settled below the channel. Is this now a bear flag? I think it is, because indicators are starting to point down. Now, another question. If euro is going to go down, and if this resistance area right here is going to hold, wouldn't that mean the dollar index should look bullish technically? Let's take a look at that next. Okay, here we are, traders. The dollar index daily bar chart, the September contract. Each one of these green bars, again, represents 1 day's trading. The euro, as you've seen, is running into resistance and starting to look bearish. That would mean the dollar it has to look bullish on charts if the euro is actually going to go down, right? Well, look at what the dollar has done. It's broken out of its channel, its parallel channel, and it is sitting right here, right now. It's looking good, in my opinion. You can certainly call this a flagpole if you'd like, and call that a flag, and on the way back up we will go. But it's not just the formation that I'm looking at. If you recall the opposite formation in the euro, we had this, and then we have this, right? The euro looking like it's breaking down. The dollar looks exactly opposite and looks like it wants to break higher. Now, the formation is there. Let's see if the indicators agree with the dollar looking strong. Let's go pull an indicator. Okay, traders, staying with the dollar index daily bar chart for September. This is the slow stochastic oscillator. And what is it telling us? It's telling us that anytime it gets down to these levels, it's gone down too far and likes to turn around and go higher. When stochastics turn and go higher, the market turns and goes higher. It's the nature of this indicator. So it looks to me like it wants to go higher. Percent K and percent D have crossed right here. The market has put in this little turn and it's starting to point higher. So the indicators on dollar are bullish now. The indicators on euro are bearish right now. So the DX looking strong. The euro starting to look weak. This indicator is a DX or dollar index indicator, and it looks strong right here. So that brings us to the next part of this equation. What is the leader of the ES doing right now? Or for this instance in this video, the NASDAQ. Let's go look at the NASDAQ chart. Okay, traders, this one is quite interesting. This is the NASDAQ daily bar chart for the September contract. This is what we call OTAPMA, or the Emini Trading Academy's proprietary moving average. This is it right here. We have failed once, we failed again, and on that crazy opening Sunday evening, it rallied up, 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 turned around, failed, and settled down here. Here being the average, here being the settlement. So we did not hold above that average. We failed at OTAPMA once again, and now indicators look like this, which I'm about to show you. So you see that NASDAQ cannot get above this OTAPMA. It keeps failing there, and if the indicators are pointing lower and the indicators in the dollar are pointing higher, the likelihood is that the indices are getting ready to crack again. Let's go look at some of the indicators now in the NASDAQ. Okay, traders, sticking with the NASDAQ, this is the slow stochastic oscillator, the same one I showed you in the dollar index, and it has put a hook in up here, as you can see in the red, and is pointing lower, and it looks to me like if we trade a little bit lower tonight, percent K and percent D are going to cross right here, issuing a sell signal. Of course, we would never take a sell signal off of one indicator. We use batches of indicators together and formations to go with those indicators. But for this one standalone indicator, it is showing you that it is running into trouble here and starting to point its nose towards the downside for NASDAQ. So that's your slow stochastic. Let's look at another oscillator for the NASDAQ. Okay, traders, the CCI or Commodity Channel Index Oscillator is doing the very same thing, rallied up, came down, and is starting to point towards the downside. Traders, I pulled about 12 indicators on the NASDAQ this evening for this video study, and 12 out of 12 were pointing straight down. So I cannot say anything else but about the NASDAQ except for indicators are pointing lower, formation is pointing lower, euro is pointing lower, dollar is pointing higher. S&P and NASDAQ likely have to come down for trading on Tuesday. Pull your own charts, Omniacs. Do your own homework. Check your indicators. Check your formations. Make sure you agree with this recommendation to go short before you consider taking it. So, traders, you've seen the charts. That is my technical argument on Monday night for Tuesday's trading, and it's a pretty sound argument. So take a look at selling the rallies in the euro and looking for some downside. Likelihood is we're selling the rallies in NASDAQ and or S&P, looking for some downside. And, of course, if the dollar index rallies, that is our indicator that the trades will likely work out. Stops are your best friend, traders, no matter what trade you're going to get into. A stop is your best friend, and never trade without a stop. You know, there's another thing I want to mention. Many of you Omniacs call me and go, Oscar, you know what? I bought and sold today, then I sold and bought, and then I bought and sold, and then I sold and bought, and you know what? You're not supposed to do that, traders. That is called shooting from the hip or trading from the seat of your pants, and no professional does that. A professional spends hours coming up with a plan, and then he acts out that plan the next day. There is no shooting from the hip. There is no, where should I put the stop because now I'm short and I don't know where the stop goes. No. Your plan needs to be set tonight for trading tomorrow, and that is it. Follow the plan. That is what Omni does. That is my consistent approach. It is the approach I try to have all of you emulate. It is what I do every day. I teach it to you. I pound it in your heads. Some of you just don't listen. Traders, I don't know a single trader that doesn't have a plan, that steps in each day and buys and sells at will, that has a winning track record. No one can do it because you simply can't outsmart the market with emotional decisions or those decisions that are called impulse decisions. There's no way to outsmart the market on a consistent basis if you do not have a methodical plan, a methodical approach. You do not plan a trade and then trade that plan. You will never get this right. In fact, for you traders that are just going to simply gamble, would you please write a check to a children's charity and donate the money to children where it'll do some good for the world? Because you know what? To just, in plain English, piss it into the markets with no rhyme or reason is almost a crime. There's a lot of starving kids in this world. So if you think that it's fun to just piss your money away, write the check, give it to a kid, save a kid. Don't save another broker across the ring or across the world that capitalizes on your emotional decisions. That is my little speech to you. I hope it hits home. I know a lot of you are going to scratch your heads and go, does Oscar know me personally or something? Because I know many of you do that. Stop shooting from the hip. Come up with a plan. If you don't know how to come up with a plan, simply come on down to www.livewithoscar.com. Ask me how to do that, and I'll be more than happy to teach you how to derive a trading plan. All right, traders, I'm out of here because I just told him I was leaving. I was going to do a quick exit, and I'm 5 minutes into speaking already. But I need to get out of here. I need to go watch more markets. I need to get ready for the trade, and I will speak to you shortly. Traders, I'll see you at the site again. It's www.livewithoscar.com. Make sure you're there. Make sure you're in the chat rooms, and I'll see you later. Traders, keep your emotions out of trading. Keep those impulse decisions out of trading. One of the best things you can do to help yourselves with keeping your emotions down is to say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Cough. Emotions are out. Always remember, futures trading is risky and can absolutely result in substantial financial loss. Traders, trading futures is not for everybody. It's not suitable for every trading account. And as always, past performance is not indicative of future results.